All right, let's dive right in. Today we're breaking down some brand new tax rules that could seriously boost your paycheck. If you earn tips or you work overtime, you're going to want to stick around for this.
You know that feeling, right? You're putting in those extra hours, you're going above and beyond for those tips, and then tax season comes along and takes a bite out of it. It's pretty frustrating. Sound familiar?
Well, get ready for some seriously good news. Starting with the 2025 tax year, the game is changing for millions of us. So let's get into exactly what this is all about and what it means for your wallet. So what is all this, really? Well, the Treasury and the IRS just rolled out new guidance. It's part of a bill called the One Big Beautiful Bill Act. And this is a really big deal because it's creating some powerful new deductions just for tip and overtime income.
Now here's the thing you really need to know. This isn't forever. It's a 4-year window of opportunity. It kicks off for the 2025 tax year and runs through 2028. So it's super important to understand how this works so you can make the most of it while it's here.
So let's get down to the nitty-gritty. What's actually changing? Two major things. First, a new deduction for what the IRS calls qualified tips. Second, another one for qualified overtime. And maybe the best part, you can claim these even if you take the standard deduction. You don't have to itemize. We're talking about something that's going to affect about 6 million tipped workers and millions more hourly employees. Okay, first up, let's tackle the tips. If you work in the service industry, listen up, because this could be a real game changer for you. The big headline number, the one to remember, is $25,000. You can deduct up to a maximum of $25,000 in qualified tips every single year. That is a huge deal that can make a real difference on your tax bill.
Let's make this super clear with a simple example. Meet Ann. She's a server. On her W-2 for 2025, Box 7 shows she made $18,000 in tips. That's it. She has no other tips to worry about. So her situation is really straightforward. Her deductible amount is the full $18,000. Simple as that.
But, life isn't always that simple, right? What if your situation is a little more like Bob the bartender? He's got tips on his W-2, sure, but he also has unreported cash tips, and he actually reported more to his employer than what's in that box. Well, this is where it gets interesting. The new rules give him options. He can pick the bigger number he reported to his employer and then add on his unreported tips. It's all about maximizing that total deduction.
And for all you self-employed people out there, this is where keeping good records literally becomes your superpower. Take a look at Doug. He's a tour guide, gets tips through an app, but his 1099-K form doesn't separate them out. Here's the crucial point. He kept a detailed daily log of every tip he received. And because of that log, he can prove and deduct the full $7,000. It's a huge reminder to track everything.
All right, so that's the deal with tips, but what about the other half of this new law? Let's switch gears and talk about overtime. This is going to affect millions of hourly workers in all kinds of industries.
So the IRS has this fancy term, right? Qualified overtime compensation. But don't let the jargon scare you. It's actually super simple. It's just the extra pay you get for working overtime. So if you're getting time and a half, we're talking about that half part. It's the premium, not your entire overtime paycheck. Let me break it down like this. You've got your regular pay, right? That's your base pay for every hour. Then when you work overtime, you get that base pay plus an overtime premium. That extra amount, that premium, that's the part you get to deduct.
So how do you figure this out? It's actually way easier than you'd think. Just grab your pay stub and find the total overtime pay you received. If it was time and a half, you just divide that total by 3. That's it. If it was double time, you divide by 4. The number you get is your deductible amount. So if you earn, say, $15,000 in time and a half overtime for the year, boom, that's a cool $5,000 deduction.
Okay, now this all sounds pretty amazing, right? But hold on a second. Before we get too carried away, there is a crucial catch you absolutely need to know about. These deductions have income limits.
So here are the numbers you gotta watch. These deductions start to shrink and eventually go away completely if your modified adjusted gross income, or MAGI, is over a certain amount. For single filers, that magic number is $150,000. If you're married and filing a joint return, it's $300,000.
Whew! Okay, we have covered a lot of ground. So let's boil it all down to the most important part. What do you actually need to do to get ready for these new rules?
All right, here's your game plan, your action plan. First, remember this is a 4-year window, 2025 to 2028. Next, make sure your income is below those phase-out limits we just talked about. Get to know your W-2 so you know exactly where to find your tip income, and practice that simple math for calculating the premium part of your overtime. And I'm going to say it one more time. If you get cash tips, please be like Doug. Keep good records.
Look, at the end of the day, this is a real chance to keep more of the money that you worked so incredibly hard for. Those extra shifts, that great service, you earned it. So the only question left is, are you ready to claim it?